Welcome back into another episode of the XRP podcast. Today is going to dive into the idea of trust. Has it been broken? Are we in maybe an era where this is starting to maybe paint in an opportunity for digital assets because there is a trust deficit going on? Today on the show, we're going to be having none other than Black Swan capitalists. You guys know them, Versan and Vandell. They'll be joining here shortly as we get into some of the details of what is happening in the market. I want to thank our sponsor today, and that is Uphold, where you guys can earn crypto better. A lot of things happening with Uphold staking rewards, so you can stake up to 20 different cryptocurrencies and get into the reward side of things. New tokens, early access, along with full transparency. This is one of the best platforms out there to make trades on when it comes to crypto. The other thing you guys should be doing is this right here. Get the card, the XRP rewards card, which comes in the form of an Uphold debit card. And the nice thing about this, guys, is you can do this without a credit check. Also get up to 6% back on all your purchases for the first 3 months. You can get up to 10% back with a direct deposit stacked in on this. So this is one of the best values out there when it comes to a debit card where you can get into your digital assets. Make sure and check out Uphold. Use the link down below. Let them know we sent you. One thing to consider, though, as you guys know, is that this podcast was rated #1 on the growth sector for January of the top business and finance podcasts out there. So that's happening because of you guys. Absolute crazy growth here on the channel. Thank you so much for everything you guys are doing. The great comments, we love those, and we do all read the comments. So if you have somebody that you want on the show, you know what to do. Drop it in down below, and we'll get started. Let's get into, before we bring on Versan and Vandell, I want to just get into the market quickly because this is where we are, guys. Market cap currently holding it at 2.36 trillion, as you can see there. And one of the things you got to focus on is this fear and greed, because fear and greed has been one that I think is a little bit interesting as it continues to stabilize at around 10. I can't believe I'm saying that fear and greed is stabilizing at 10. This was at 5 just 5 days, 6 days ago. So for the fact that we've doubled into 10, but we have not seen this kind of fear and greed in a very, very long time. If you all the way back, really, if you go back into 2023, in this market, it has not been the case. So understand this is one of the things that, of course, is affecting how the markets flow. There you can kind of see Bitcoin dominance starting to separate up, back at 58% right now. And in comparison, I think the key here is what has been going on with the sell-off. We'll talk about that today, along with so much more news and getting into all of this. It's going to be a good one. So stick around for all of that. Let's get into it today. I want to bring on Vandell and Versan. Let's bring you guys into the show. How are you?
Doing great. Yeah, it's good to see you, Paul. Thank you for bringing us back on. It's always a pleasure.
Yeah, so obviously you guys are a big hit here on the show. Everybody loves to hear your insights. One of the things that we had a chance to chat with prior to the show and kind of setting up for this is this idea around the trust deficit that is occurring and essentially the new ledger that's being built right now. When you look at where the market is going around digital assets, the fight that banks have right now with the Market Clarity Act in terms of just pushing back on it. And now with all these Epstein files dropping, and we find more and more banking problems that are being exposed by these files, which creates a whole new KYC AML issue. What do you guys think about everything that's being dropped right now?
Go ahead, Vandell. Why don't you begin?
Okay, so first of all, Paul, I have to be very frank here. I have a very contrarian view as opposed to what the headlines are suggesting and the mainstream consensus.
Let's hear it.
Say. Yeah, so first of all, I don't think it's any coincidence at all that, and it's important, worth noting that when we saw this huge classic wipeout that occurred in the crypto market, liquidating approximately over $1 billion in positions, it overlapped with a surge of stories and headlines that begin to surface.
Yeah.
Now, the interesting part of that is that drawdown that we just saw recently was aligned with a wave of all these narratives that began to surface.
Yep.
And as the sell-off accelerated, we suddenly saw even more stories surface. One of them being the whole Epstein connection to Bitcoin.
Yep.
The other one was Binance insolvent. Another one was the negative sentiment around the market structure bill being rejected or delayed. So all these narratives began to surface and hit the headlines as prices were already correcting.
Mm-hmm.
And that overlap there, in my experience in financial markets, are strategically orchestrated and by design. So the point I'm making here is that regardless if there's some elements of truth within the Epstein files and some sort of ties to Bitcoin, connections of that sort, I'm not denying that, because there's a lot of information that we will never have access to and never really know, and we can only speculate based on the data we have available.
Mm-hmm.
But the point I'm making is that even if there are elements of truth within that headline, that story, and the connections between Epstein and Bitcoin, the truth that was released or the elements within that can still be weaponized, especially when deployed at the perfect time and at specific moments. And of course, you would know this as well, but if you've spent any time around in financial markets, especially crypto, you learn to focus on, I would say, less what the story is on about and more suddenly about when the stories are being released.
Exactly.
I think that's a critical point to understand, which is not really taught in conventional business schools or in conventional ways of thinking when it comes to financial markets and investing. And that's truthfully because they don't want people to understand that the narratives and headlines typically show up after the move is already done, or they show up during the move to amplify either exit liquidity or entry liquidity by swaying human emotions, because humans tend to get very emotional on certain headlines and topics. So again, there could be some elements of truth within it, but the release of that information and the surge of that story is, in my opinion, by design.
Mm-hmm.
And right afterwards, we saw a rebound in prices in crypto.
Mm-hmm.
Well, you have to consider also the failure in banking compliance in a lot of this document release, because KYC ML basically was thrown out the window. Most of the major banks process hundreds of millions in these transactions for years without any intervention. That we know has occurred. And then you have this pushback from the banks themselves. And of course, we know why now, and that is they want to control and continue to control the system. But they're pushing back, of course, against what's happening in crypto around the Market Clarity Act. And I think this is where the political and the financial synchronicity has started to coalesce. This feels almost like it's designed around these systemic glitches so that they can hide in plain sight, the bad guys. And now if you move this into the ledger, it gets much more difficult to do things like that, for sure. What do you think this results in if, in fact, we continue to see these kind of disclosures happening?
Real quick, like he said, none of these events are happening in isolation. So it really pretty much confirms that markets, politics, media narratives, financial policy, none of it is random or disconnected. They're very interwoven on many different levels. They're coordinated and simply amplified by the very same institutions that control the levers of money and information.
Yeah.
So all of this is not happening by accident. It's a recalibration by design. And of course, if you don't understand that, then people will start reacting emotionally instead of positioning themselves strategically.
Yeah, I think a lot of people sold this recent dip worried that they were just going to lose everything. So yeah, you're exactly right.
Yeah. Well, every cycle in history, you could see this. It does follow the same pattern. Like you said, trust is beginning to erode. Institutions begin to weaken, then the volatility increases, and then a solution is introduced. I learned a lot of this from Ray Dalio. He talks about this in his book, The Changing World Order. The crisis precedes the reform, and disorder precedes the restructuring. So I think that's where we are. You don't roll out really a new system when people are comfortable. You have to do it when people are desperate. So what we're seeing today, again, isn't dysfunction. It's all controlled transition. And that's why trust in politics is collapsing. It's aligned with the whole Epstein files.
Yeah.
Trust in the media, that's been gone for a while. Your show probably does better than Fox Business. Trust in banks, that's going away too. Trust in the dollar, it's declining globally. So what are people doing? They're gradually taking control of their money. They're pulling it out of banks, buying hard assets, moving to self-custody. They're looking for alternatives. So none of it is coincidence. And that's very interesting because when I saw that massive correction in gold and silver, the last time we spoke, we were telling people to buy gold and silver and continuously stack way before that parabolic move came. Not paper ETFs, not derivatives, only physical. And when we saw that massive correction, we told people the correction was going to come. I mean, things don't go up forever.
Yeah.
It's just important to clarify that none of that was organic. It was all leverage driven. And when you look at the mechanics behind that, you start to see that the large bullion banks and the banks, they were dumping the paper contracts to simply suppress the price. And what have they been doing ever since? The physical demand actually surged. Meanwhile, people, were selling.
Yeah.
They were buying more, right? So I don't think that's weakness. I think that's accumulation, and it's being done strategically. So going back to what my brother was saying, the narratives that have been coming out are aligned with these volatility moves, these swing trades over there. So, and then it ties us back into the Federal Reserve. Every time they print money, they're not creating wealth. They're simply creating debt, and they're using that dollar printed to buy up assets and push the liability onto you.
Well, yeah, exactly. The loan just keeps on going too. I mean, in the essence of the dollar valuation, but more importantly is just the rise in what the dollar is worth. So it definitely lines up with kind of this theory of controlled collapse narrative, which even Trump was saying this the other day when they asked him, the strength of the dollar. Even though it has corrected slightly, but the point being is that their narrative out of DC, especially when you look at what Besson is saying, it seems like this is, I don't know if it would be more of a byproduct of incompetence in the banking system to where they're exposing all these, narratives that are coming out of the Epstein files and looking for some sort of hard pivot to a digital framework. That's what concerns me, because then you get into CBDC discussions, and that's the thing that concerns me most. Do you think Besant or Trump and the administration are maybe secretly planning a CBDC?
I wouldn't be surprised. Well,
Do you want to
go ahead, Vandell?
Yeah. So ultimately, we have, I'd say, over 100 different economies in the world.
Yeah.
And central banks that have been already doing research and development on central bank digital currencies. And if you look at the technical aspects of a CBDC versus a stable coin, they have the same characteristics and are both programmable by design if they wanted that functions. But the point is, whether it's a CBDC or a repackaged branding of it as a stable coin, at the end of the day, if it's on the blockchain, if it's programmable, if it's surveillable, whether it's happening now or not is irrelevant, because the point is they open the doorway to that control mechanism if they decide to in the future, based on certain policy changes or changes in the environment or whatever changes take place throughout this transition. They can foster and create an environment that creates problems and then forces them to introduce a solution, as my brother said.
Right.
And sometimes that can have cons on the back end that isn't so visible to the human eye on the surface, and you won't find out until later. But if we study history, and we always like to look at history, you always see that throughout all empires that have come and gone, and currencies that have collapsed, and new ones that were reintroduced, there's always a trade off in sovereignty and liberty at the end of the day. And that's what governments do. That is a historical fact. And I don't see that changing this time for any reason. It makes no sense at all from a incentive perspective. When you're looking at the powers behind the scenes, the names that people never heard of, those are the people really in charge. It's not the people you see on the TV, okay? It's people behind the scenes pulling the strings, finance ministers, corporations, billionaires, tech oligarchs, and central bankers, So at the end of the day, this goes back to the first point you brought up, which is trust is falling apart. And if we do look at history, we'll see that every currency reset and monetary reset and new world order that was established was a byproduct and a full result of trust collapsing, and it happens in a sequence. It's from unsustainable rising debt levels. That's the first stage. The second stage of that is because of the rising debt levels and governments' reckless monetary policy and printing money, that leads to hyperinflation or high inflation and currency debasement and the loss of purchasing power. And the third stage of that sequence is a collapse in confidence and trust, which leads to the fourth part, which is civil unrest.
Yep.
Now, we're not at the civil unrest part yet globally, but we're starting to see the pinch within that sequence, and that's people feeling the pain and losing trust in banks, in government, in the US dollar. And that's the reason why central banks have been net buyers of gold since 2009. And they've been reducing their holdings of treasuries since 2014.
Yeah.
And accelerating that buying in physical gold and tangible assets for the longest period now. So that all comes back to trust deteriorating.
Do you think that when you look at this breakdown of trust and kind of this illusion of security, especially around the legacy banking system, because I think now that's being exposed, that, a lot of these financial disclosures are basically saying the banks are, you can do anything you want if you have the right kind of mechanisms in place. Obviously, that changes when you go to the ledger and you look at the opportunity around this. It starts to kind of present perfectly with what this administration is doing in terms of the alignment to move to digital assets. Then you look at RWAs, real world assets, and what that's going to look like, and the explosion that we're already seeing on Wall Street that's going in that. Is the timing for institutional stress, doesn't that seem a little bit obvious now?
You make a very good point, Paul.
Yeah. Well, honestly, I think tokenization is probably one of the biggest conversations happening right now. And honestly, Paul, I think it might even be bigger than crypto itself.
Yeah.
Because when people hear about the blockchain, they think coins and speculation, but tokenization isn't about the coins, right? It's about assets.
Yeah.
And that's completely different scale. So we're talking about real world value. You're talking about real estates, bonds, equities, commodities, etc., even intellectual property. If all that value can be represented on the blockchain, you're talking about a new financial system over there, right?
Exactly.
So instead of paper certificates and custodians and all the slow settlement, yes, there's efficiency. So from a technology standpoint, I get it. It reduces friction and so forth, reduces cost, etc. This is where people, I think, need to slow down and think about it critically, because tokenization isn't really just innovation. It's about restructuring ownership. So at some point, if everything becomes tokenized, all value, you're essentially talking about putting the valuation of every asset class on the blockchain. So we're not talking about millions or billions. We're talking about trillions or even quadrillions. That's all the money in the world.
Right.
Represented digitally. So the real question then becomes, who controls the rails? And I think that's when you start to get in the weeds of this, because whoever controls the whales captures the value, right? And that's where most people aren't thinking about, right? There's a clear upside, sure. Tokenization can democratize access, sure. But I think there's a trade-off to that.
Well, and it gets to your point, is that privacy may have just been lost, now.
It has been, yes.
I mean, I just don't know. Even if you have physical gold or even cash, which I think is going to go away in the next 5 years, maybe, we could be at that close of a run, especially if we get into stablecoin domination, which is really what Besant and Trump are trying to do to kind of backstop U.S. treasuries, which makes sense because you had, China jumping out along with many other countries selling U.S. treasuries now.
Japan also.
Yeah, exactly. The reverse carry trade on the Japanese. Even though the Japanese are kind of aligned, I think they would be somewhat in alignment with what Besant and Trump are trying to do there. But it also gets into this whole Clarity Act debacle that we're facing. And it's amazing to me that, Besant, I actually have a tweet on this. Let me bring this tweet up real quick and I'll show it. I want to take a minute, guys, and just invite you to join the Barron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. We have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Barron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access. You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing, so check it out. Besant talking about that Coinbase is blocking the crypto bill, okay? So he says the recalcitrant actors are blocking the crypto bill because they'd rather have no legislation than one they dislike. This, of course, is Coinbase's stance of Brian Armstrong trying to protect, or at least under the guise of protecting, a little bit of yield on stablecoins. Let me play this clip for you real quick.
On this crypto legislation that seems to be hung up in the Senate, Secretary, do you expect that the Clarity Act will in fact come back for a markup? And why are we having a debate about bank margins? Where do you stand on this? Do you think crypto platforms should be able to pay rewards, pay customers for moving stablecoin or money out of traditional bank deposit accounts and keep them on crypto platforms? Where are you on that issue?
Again, Maria, I think what we're seeing in the crypto market over the past few months means more than ever that the U.S., we need market structure, we need clarity, and we need to get this across the line. We got a few Republican actors who said, well, it'd be better to have no legislation than the legislation we don't want. And I think both on the banks, the other crypto firms are united against them. So we need to get this across the line. The U.S., under President Trump's leadership, the U.S. is becoming the crypto capital of the world with our best practices, best regulation. And for crypto to remain a viable digital asset and move forward, we need to get this Clarity Act done.
All right, so that's the Treasury. I mean, he looks kind of upset there that she's asking this question. Where do you guys stand on this? Are you pro getting this done? Are you feeling that why do we need it? I mean, there's different people that have different opinions on this. What do you think?
I'm going to have to quickly go on this. All right. So when we talk about the Clarity Act and crypto regulation, you have to also recognize something right away. This is also not happening in isolation either.
Exactly.
Regulation, let's be honest about it, is part of the same transition. Now, I do want to be balanced here because I'm going to get a lot of hate for this, okay? But I am going to be optimistic, and I typically am. I genuinely am, because I think smart regulation could certainly bring legitimacy to the space. Now, I think gold is central to that. I've been saying this for a very long time. But at the same time, it's very hard to ignore the reality of how these policies are usually unfolding, okay? There's the headline. There's the minutia that you see what we just watched right there. Yeah, you can get picks, you can cherry pick what you like, but what's actually being engineered underneath the surface? Now, regulation so far, as history shows us, has never been about protection. It's about controlling the structure.
100%.
So when governments want to regulate markets, it's really about protecting retail. It's about redefining and who's going to pretty much survive. Now, here's the good side of this. This is going to help decide which technologies are actually allowed to be plugged into the financial system and which ones are essentially going to be cut off. So when we look at the Clarity Act, I think the broader stablecoin and digital asset legislation played some role in it, but I don't think we should view them as, you know, something to protect us, right? It's all about drawing the blueprint for the next system. And when you start to look at the stablecoin bill, for instance, it was really designed to support the dollar. Okay. I looked into the stablecoin bill, the Genius Act. On the surface, it sounded positive. It had oversight, transparency, all that stuff. And when you look underneath of it, it had the same frameworks for a CBDC, right?
It's debt transfer. That's all they're doing.
The Clarity Act, though, the good news is it's going to separate the securities from the true utility tokens, and that's going to change everything because
Yeah.
once regulators draw that line, speculation dies, the narratives die, and in my opinion, most crypto projects today, they're not going to exist by that point.
Well,
So,
you've got the kind of the cornerstones of Rails concepts out there, which are the utility products out there. Obviously,
mhm,
XRP is, I would say, the 800-pound gorilla.
mhm.
HBAR, maybe XLM with Stellar, what they are doing, maybe a handful of others. And it's very possible we could see a chain that come. I mean, if you look at Canton and what they've been able to do in a short time,
Yeah,
that is,
messaging layers. Mhm.
yes, yeah, that's interesting to me because it starts to open up this whole utility component, which even the DATs have kind of gone this direction with the digital asset treasuries. Now you get away from DATs who are just trying to lock and hold against an MNAV, buy an asset, hold it, and hope it goes up. That's your business model, like what Saylor's doing with strategy. I know he's putting a
Yes.
lot. Yeah, I know he's putting a lot of, fancy instruments on those to pay dividends. I get that, guys. So you can leave the comments out. But the real point is he's owning Bitcoin, hoping that it will go up. Versus if you get into DATs that go into utility, that gets different because now it starts to play into a completely different angle for this. When you guys frame this right now and you look at the major tokens and projects and companies, Ripple stands kind of on the top of the heap right now. Is there anybody else that you think might be aligned with this next generation of finance?
Mm-hmm.
Would you like to go, Vandell?
Yeah, HBAR, Hedera hash graph,
Yeah.
such a superior technology for tokenization and really disruptive technology. So even though the price isn't doing anything right now, the crypto assets are just, pretty much depressed across the board,
Yeah.
including HBAR. At the end of the day, if you really look at not just their governing council and what kind of powers are sitting behind them at the table, but really what they're building out. Okay. That's the key there. Because when you invest in these technologies and try to identify opportunities that aren't being reflected yet in the price, you have to ask yourself, okay, what is the superiority of their technology and
Yeah.
how relevant is it going to be in the future based on the direction the world is heading in, and how will that future look, 12 to 24 months from now or a few years from now? And if you can see beyond the curve and look forward, have that forward thinking and vision, you'll be able to see that some of these technologies are way ahead of their time and already building something for that new world that's coming. A tokenized world where everything is pretty much digitized, all forms of value is tokenized. Now we're on that path already.
Yeah.
And HBAR, Hedera Hashgraph, is one of the entities that I think is going to play a critical role in the new system, along with Stellar, the Stellar network, and the XRP ledger. And
Yep.
there are others as well. But just
It's
to
like this
point out one.
this era of utility tokens, and I should just say projects, align very similar with the old world value of gold, which is the ultimate in utility, when you look at it. So if you have digital utility over here for Rails, you have the ultimate utility over here from the old world, which is physical gold, and the demand that continues to push onto it. It begs the question to you guys, is the price of gold right now, Fort Knox, no real comprehensive audit yet. It's interesting that it was talked about and then kind of just brushed under the rug. Since the 1950s, I think it was. So the real question is, what happens to the dollar if it is being revalued? Where would this go? I mean, you already have all these countries piling in gold. Even Tether sitting out here just acquiring gold as fast as they can. What do you
I
guys
mean,
think?
that's a clear red flag. I mean, if Tether's buying gold and supposedly their stablecoin was backed by T-bills,
Yeah.
I mean, they don't even have faith in the underlying asset that backs them. Okay.
Mhm.
My brother and I had a very interesting call the other day with Michael Howell, and he's the CEO of Cross Border Capital,
Okay.
godfather of global liquidity. That's what people call him. It was very interesting. For the first time in a very long time, I actually had some insight from him about the trajectory of what we've been talking about here. We are seeing I would say, a basket of commodities that's going to underpin where all of this is going.
Yeah.
The real driver of the markets are liquidity. And what he mentioned, and I learned this from him years ago, is that the financial markets are only healthy on the collateral that backs it. Okay. And when you start to look at what they're doing, they're just accumulating metals. They're accumulating silver, copper. We're talking about all resources. Okay.
Yep.
And sure, that ties us into the currency debasement trade. But more importantly, gold is going to underpin all of this. That's exactly why they classified it as tier 1 collateral. It seems like people just continuously forget and dismiss it.
Yeah.
It wouldn't be tier 1 collateral unless they were going to have it as collateral. And the only missing piece right now is, I think, a digital representation that can kind of factor all that in.
Another
What would
point.
be-
Go
Go ahead.
No, please go ahead.
I'm just kind of curious, Versan, when you look at the potential, because Sheckman and I have talked about this many times about the potential of a revaluation of gold. In somewhat of an attempt, I mean, it could be an attempt to erase debt down the road. What do you think that's a possibility?
I mean, yeah, absolutely. I mean, you could use it as a mechanism to shrink the deficit.
Yeah.
Listen, the reason they're all buying gold is simply to strengthen their balance sheets. They're trying to reduce counterparty risk. They're trying to improve their capital ratios. Okay. So it's almost like cash at this point. They're not accumulating it for no reason. And also, Andy has explained this to us before. They have a revaluation account.
Yeah.
Folder. So,
What do you think the top line is here on gold right now? It's
Oh my God.
nesting in around $5,000 right now.
Honestly, I think it's undervalued, and people need to hold our hard assets. That ties us into the whole tokenization thing again.
Yep.
They don't want people holding real assets. Okay. And that's why
Yep.
they're so aggressively manipulating it while still buying it.
Yeah,
I don't know if you saw that AI video that was financed by the Bitcoin maxis,
I did.
where it was Warren Buffett saying, go sell all your gold. And
Yeah.
people sold it, and then it jumped to 56. It topped.
Yeah, look at this.
So-
Look at that that fall off the top. If you go up to that wick, which hit 55.95 on that hot day, we drop down to the bottom of the wick. That's a digital asset move. In 2 days, we dropped 20% on gold. And then, of
Yeah.
course, right there, you have gold coming off the bottom. If you bought that bottom and where you are right now trading, and you're up 14% basically over the last week. So it's very volatile. Is this something that you have seen ever in history before on gold? As volatile as this?
No, not really. All I know for a fact is that that's a leverage trade. It's
Yeah.
not organic, as I described earlier. It's artificial. And the minute they shorted it, the demand only increased.
Exactly.
So
Yeah.
the real demand is increasing as the leverage trades are showing an entirely different scenario. So I would just say, don't watch the paper market, watch
Yep.
the real demand. So they're using this as an opportunity to profit on the way down and profit on the way back up. And with those profits, they've been buying more gold, more silver. So I
Vandell,
encourage
you were going to
everybody
hit
to
on
buy.
something about this, because I think this is it's an intriguing element, because this gets back into this new infrastructure potential rollout, what this digital reset might look like in practice. What would you say is next chess piece move?
Well, I think it's very interesting how the narrative came out from the Epstein and Fort Knox saying there's no gold in there.
Yeah.
And the next day, China comes out with this threat saying, we're going to
Sell
challenge the
treasuries.
dollar. You
Yeah.
see what I'm saying? Right.
Yeah.
What I do know for a fact is that gold is going to be central to where all this is going.
Mm.
This is outlined in their frameworks. I'm not just saying this. You can listen to some of the other experts out there.
Yeah.
They'll tell you the same thing.
Well, and if you think about just where we are right now in the digitization of, I think, the financial system right now, DC is pushing for this very hard. It's interesting, though, that the banks, maybe they're trying to hold on to a last grasp, or is this really just a way to maybe slow this, this train down slightly, to give them a chance to kind of catch up here? I mean, there's a lot of narratives that are in the water right now. So, and
Final thing I'll say, and I'll give it to my brother. Recently, when Scott Bessent was doing his testimony, they asked him about the parabolic move in gold.
Yeah.
And he just started saying these are, I don't know if you caught that, where he was just dismissing it,
Yeah,
saying that this was artificial, it's not
exactly.
real. Yes, it is real. So he directly lied to the American people there. And the only reason he would say something like that is to push fear into people to spend
Right.
dollars. And we've
Yeah.
seen this over and over. And think about what happened, I think, in the last administration. The United States, the Trump administration did a lot of repatriation of their gold. You know,
Yes. Yes.
why is that being dismissed now? So it's pretty damn clear what they're doing. They're trying to drag out the dollar system as long as they can. And that ties us into the central banking model where they
Yep.
can, the central bank model only exists so it can confiscate your wealth. Where's that wealth going? They say follow the money. Well, it's going into commodities, it's going to
Mhm.
gold, and it's going into settlement digital infrastructure,
Yep.
not speculation. And that's really what XRP does, right? XRP is not about replacing the banks. It's about wiring them together and restructuring the plumbing.
Yep.
Now, that means if we're restructuring the plumbing, well, what's the collateral? It's gold.
Imagine if you could look at a technical bridge between what is held in gold, revaluation, and XRP liquidity pools tied to this down the future. Because at some point we're going to see more, I think, more tokenization, but the ability is having, back to your point, is the liquidity needed to be able to move these assets, especially from country to country. If we look more into that, definitely a very different. What do you think about this legislative kill switch that they're proposing, which is really kind of a threat to, the banks? I mean, basically, it's kind of been a too big to fail kind of thing. But if you look at where this could place Ripple's on-demand liquidity layer, this would be interesting because now this would automate a lot of these middlemen roles, for transfer of funds. So that would eliminate a lot of these kind of things. This could be a big deal for Ripple if Clarity. Maybe that's why Garlinghouse continues to push so hard in favor of Clarity going through.
I mean, in my opinion, I think the clarity has already been there for a very long time with XRP, and they're simply just waiting for everybody to catch on.
Yeah.
It's something along those lines, because when you really start going into the weeds of Ripple and their history, this gets so much deeper. It goes into the Ryan Fugger family with the Rothschilds. So listen, they've had this model ready to go, and I think, like all things, they're stalling it for
Yep.
multiple reasons. Number one, to profit immensely by creating confusion, which they've successfully done. And that's why everybody in the comments will be like, no, it's this one, no, it's that one. They don't realize that this is a multi-chain system that's
Yeah.
being built.
Right.
So I honestly, I think it's been decided. It's just we're waiting for this inevitable shift. And the people I've spoken to, who I believe have far more insight than I do, have explained that they're waiting for the right geopolitical conditions to roll this out.
So this is another black swan event potentially that could cause the final switch to occur.
Yeah.
I guess the real question is, what would that be? I mean, what would you
Liquidity
guys
freeze,
expect?
probably a liquidity freeze,
Yeah.
something in the settlement. Because the more money we're printing, the more friction there is, and the collateral, the demand for the collateral is going to increase, something along those lines. And that's what Michael Howe was trying to explain to us from a different perspective. But, there's also this massive demand for dollars because there's not enough. And no matter how much you inject, you just keep debasing it. I think it's really going to be tied to some of the bigger things, as far as people can't afford their groceries, people can't afford their rent. So they may just keep kicking this down the road as long as they can until the people beg for a solution.
Okay, that kind of brings me to the point, which is kind of the race against the reset, if you think about it. Are you worried at all that the fact that we have lost trust in media, banks, finance, DC, our regulators, that when the reset does occur, do you think there will be maybe a subset of the population that decides to go kind of off grid for finance?
Very challenging.
Yeah.
Very challenging. You can't even survive today without an internet connection. You can't pay your bills. And I've read the WEF forms. I've tried my best to share this, and people will just call me doom and gloom when it says it right in there. There are certain conditions you're going to have to adhere to if you would like to participate in this new financial system.
Yeah.
And that ties us back into the whole tokenization thing. And this is why I always encourage people, the pros of the technology, sure, there are opportunities, but this is why you need to hold physical hard assets.
Yeah.
Even in my strategy for financial planning, tier one, basically the most important, it's gold and silver. Anything physical. It doesn't just have to be gold and silver, but food, water, things of that nature. Because we've seen what they've done to the Canadian truckers when the pandemic took place. People just forgot about that. That was a test phase.
What
That's
about
how far
nation
they can go.
states? What about nation states that just completely go a different direction, you know, and
I think
we,
that's the pendulum swing. Now we're going into the political system. And if you look, every time the pendulum swings one way or the other, whether you're red or blue, more and more power and executive authority is funneled to the top.
Yeah.
Okay. So that's kind of tying us into the trust. People don't trust their politicians anymore.
Vandell, do you think that we would see potentially a major bank collapse that could possibly be a trigger point?
Yeah, it's possible. Certainly in the balance of probabilities. We saw the first banking collapse in 2026 just recently in, I believe, Illinois. And essentially, what they're going to do, well, this is my opinion, but they've done this before, and I did say more banking crashes, more banking
collapses,
insolvencies will take place, yes. And essentially it's because they're creating an environment that makes it very challenging for the banks to thrive and survive. So they create the environment, and therefore you have institutions, smaller banks, regional banks that actually can't survive in this type of environment, and then they go bankrupt. They go belly up. So essentially, everything we're seeing right now, if we actually fundamentally understand the big game plan here, is to essentially have a few powerhouses that control the monetary system. And yes, I'm talking about banks. Banks are not going away. Yeah. This is the biggest nonsense I've ever heard in my life. We've spoken to so many people that are way more connected, way more intelligent than we are, and they've confirmed the same thing. Banks are not going away. Yeah. What you're going to have is a transition of the banking system, where you'll still have certain banks that will be anchors in the new system. And they take their cues from the BIS, of course, the Bank for International Settlements. But you're going to have a wave of regional banks and smaller banks that get wiped out of the equation. And in order to have a monetary system that is really, this is the goal, centralized and easier to control, and even potentially roll out a solution after they make the mess. They always make billions cleaning up the mess to begin with, but they create the mess. In order to roll out the solution, you're going to have a fewer entities that have that type of authority. So the goal here is simple. It's to wipe out as many regional small banks as we can so that we could consolidate power into a few entities and eventually roll out our stablecoin or CBDC and get more control. That's the goal here. It's in the documentation.
What do you think the timeline is here? Because everybody's been kind of pointing at 2030 as the potential where this is heading, where a true great reset could occur. But at the same time, that would still be another administration that could get thrown into this to try to effectively execute on this. Where do you think timeline is going?
I mean, I don't think Trump is going to leave. It's a whole different rabbit hole, but I don't think he's going to leave. I think he's going to try to stay in office, and that's a whole different discussion.
All right. Okay. Now we got to,
I'll be careful there. Okay.
We got to go that. Well, I'm willing to go there, but why do you think that?
Oh, Trump? He's publicly stated this before, and I've heard his speeches.
They are throwing it out there. They are throwing.
Now they wouldn't be doing that unless they're trying to plant the seed.
Interesting.
And I think people react more emotionally. It's a psychological. I mean, they'll put things out in soft disclosure, and that's why now you see the whole UAP thing. Whatever.
It's the art of the deal too. You throw out, you manifest. You know, there's a whole chapter on this, how he goes and he manifests these deals, even though they're as outlandish as they may be. He recoils back down to a defense position, then they manifest up again to try to reposition it, on the negotiation.
Yeah.
And
Yeah.
maybe that's what he's doing with the American people right now.
Yeah, I wouldn't be surprised. And if I could just compliment what my brother said, there is something that, remember the last time we spoke, we talked about the QE. They're doing a hidden QE.
Right.
Well, they're going to do this. And basically, the next phase, what's coming is a massive cycle of mergers and acquisitions. So further consolidation of the banking system.
Yeah.
Right. Few powerhouses will survive. And then the transition of the new settlement language model is going to occur. And I think that's for Ripple Net Protocol, et cetera, et cetera. The threat, though, the real risks people need to be watching is really the Bitcoin trade. I mean, they are so toxic right now, and MicroStrategy is the perfect example of that risk. They're essentially
That could be unwind
leveraged.
so fast.
Yeah,
That could
they're a
unwind
leveraged
so fast.
Bitcoin holding company. That means they have massive exposure, largely financed through debt. So if Bitcoin drops and the macro conditions tighten, which we're already seeing, you could look at the bank's balance sheets, then everything becomes extremely sensitive, right? So that could be one of the things that knocks it down, but I don't know. I really don't.
Yeah,
Listen,
difficult to know a timeline.
I put out a blog to our members today on that very point you just hit on, Versan, is that Bitcoin is kind of the toxic trade right now. It's one I'm staying away. I'm actually going into HBAR, Stellar, and of course XRP as the alternative, adding some Solana in there, some ETH, because I see some elements there from this next short period of time as we start to see many of these assets go up. So I'm in agreement with you that this is intriguing. But I'm very intrigued about this idea of Trump staying in office. That one, we're going to have to explore that offline a little deeper.
I'd be happy to.
I want to hear more about that, because it's definitely a different push for sure. All right. So obviously we hit on quite a bit today. We'll get more into this as clarity and the potential direction of DC start to align, because this involves so much of where Ripple's their superpowers, I think, start to engage once clarity is done. Because if you think post clarity, they would be defined as a digital commodity. They would have, from a bank custody standpoint, they'd have safe harbor for institutional custody. They'd also have a high volume USD to XRP corridors that would be a liquidity pool versus kind of fractured and offshore where we are now. And then you look at the potential plug and play that could happen with things like FedNow, et cetera, others that would be out there for settlement layer. So think about this. I think this is why Garlinghouse is so tied in to getting this done and standing on the other side of where Coinbase is right now.
I mean,
the market,
Garlinghouse wouldn't be working with the IMF so closely unless, they're going to use it as a new reserve asset.
Yeah.
And the market structure bill, the Clarity Act, I know there's a lot of emphasis on it now because it got delayed or rejected. But the truth is, it's all irrelevant. Okay, Paul, it's all irrelevant. None of it matters because the fact is we're going digital. All right. Everything will be tokenized. BlackRock, Larry Fink, the banking cabal.
They're going, it doesn't matter is what you're saying. Yeah. It doesn't matter what they do.
None of it matters because it's an inevitable outcome. It's coming. Yeah. Whether it happens today or tomorrow is completely irrelevant. It's just a headline. It's just a story. Innovation innovates. Innovation gets adopted, and then it gets regulated. Then it gets controlled, and then society adapts and shifts. So regulations are an inevitability that have to come with this disruptive technological revolution taking place. It's coming. It's a done deal. It doesn't matter if they announce it today or tomorrow. The key is to position yourself.
I was gonna say 3 things, guys. 3 things that people need to do now. What do they need to do?
You want to go Versan first?
Well, honestly, I think right now people need to be playing offense and defense. I said that last time. I do believe people should hold hard assets. Monetary instruments are gold and silver. Silver used to be one. I think it will gradually become one again.
Okay.
Poor man's gold, as they say. So hold metals. The second thing, if you're investing in the future, I think you need to be looking at settlement infrastructure because that's where the problem lies. It's all about all the friction and, of course, investing in the technologies that are targeting those niches like smart contracts, interoperability. So my largest portfolio in crypto begins with XRP. My second one is XLM. My third is HBAR. Yeah. I also hold quite a bit of quant. which is like a connective tissue for these
Yes,
blockchains.
we've talked about that before. Yep.
Yeah, and just a few other protocols that I see having a demand later on down the road once you do have guidelines and clarity where basically institutional capital is absorbing what's left, right?
Mhm.
But that's about it. And then have some cash. You need some physical paper money.
Interesting.
Just a small
Okay.
amount.
There you go.
If I had 3 tips to give anybody that's actually practical, 1, ignore all the narratives and headlines. They're not going to serve you at all. Okay.
Yeah.
Ignore them. Doesn't matter. It's all irrelevant. The second part to that is position yourself in assets based on where you think or how you think they're going to be priced in 12 to 24 months from now, or even years from now, because the balance sheet will continue to expand, the money supply will expand, debt will continue to rise, and currency devaluation is inevitable so that the governments can refinance their debt and cut their debt burden in half. So currency devaluation, loss of purchasing power, 100% guaranteed. So position yourself based on where you think prices will be, and make sure they're in asset classes that will hold their value during this transition, or at least carry that value over and appreciate in value in a new system. So you're positioned for either scenario. And the third thing I'd say is have a concentrated portfolio. We're taught in business school and conventional wisdom that being diversified is going to save you, it's going to protect you, it's going to mitigate your risk. And the truth is, it will lower your risk, but it will significantly dilute your returns. So if your goal is to financially get ahead of the monetary base, which is 8 to 12% annually, and really beat currency debasement and build wealth, then it's not going to be in a very spread out, thinly diluted portfolio, diversified too thin. It's going to be in a concentrated portfolio with a few assets that you have serious conviction in, and go heavy behind those, because now you are positioned to really outperform the benchmark and capture all that upside that's going to come as the system goes digital. Okay.
Yep. We are ready, guys. And I think make sure you're subscribed here. Of course, you guys can visit Black Swan Capitalists over on YouTube, and of course their website. We'll drop a link down below. Versan, Vandell, always loving to have you guys on. Thanks for coming in today. I appreciate it.
It's a pleasure. Thank you so
Thank you,
much.
Paul.
All right, you guys know what to do. Like and subscribe. We'll catch you next time right here on the XRP Pod. Take care.